Hey everybody, Jose Blasco here. We're about to start in just a few seconds. Please go ahead in the comments box and type for me a quick yes, a quick hello, and that would mean that you do hear my voice. And I am counting on you also seeing my screen, and therefore if I get a yes for both the screen and the sound, then that means that we will be ready to get started. So please go ahead and give me a yes. Give us a quick hello on the comments box. And that way we can begin. I'm just gonna wait a few seconds just to confirm that everybody is in sync. Okay, so it seems that it's all good. Technology on our side, and obviously our passion for trading in its place as well. So we are ready to begin our session. So welcome, guys. My name is Jose Blasco. I am your guide for today's session. Today is March 21st, 2019, and today's session is a longer-term session. Okay, so set some goals. Ideally, today I'm going to have goals, a little demanding goals, if you wish. Let's see if we can accomplish all of it. And the goals for today would be to look at directional opportunities in the stock market for longer term trading, long and short, and also non-directional opportunities using options. So we would like to look at all of these, and ideally we would have a little extra time as well to look at some key currency pairs. Okay, so the goal today is to look at all of this. Okay, so we're gonna be busy. Also, as we start the session, I had a special request from a student, so I'll just be reproducing one of the TradeStation workspaces, so that way you know how to do it yourself. Because sometimes you guys send questions, and there are certain questions that are a little difficult to answer in a written form. It's much better, to be honest, to visually demonstrate. Okay, so I'll start today with this little demonstration on how to build a workspace with TradeStation, and from there we'll jump into the session. Okay, before we start everything though, we have a disclaimer. As you guys know, I always time myself to see how quick I can do it. So let's go for it today. Disclaimers: the following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Good. So disclaimer out of the way. We have the session launched. AutoUFOs here ready and waiting for us. But again, before I start the session today, as I was saying, I will demonstrate quickly how to build a workspace with TradeStation. The workspace that we were being asked about is the workspace that we normally use in our shorter term sessions. Okay, this is that it comes with the name UFO EML Lab. You can see that in the bottom part of the screen. So as you can see, this workspace is made of two charts, okay, and a matrix on the right. Okay, two charts and a matrix on the right. Okay, so what I'm going to do is I'm going to first go to File, to select New, and from there I will select Workspace. This will give me opportunity to have a completely blank workspace for me to start working on everything I need in that workspace from scratch. And remember, what do we need in this workspace? Well, we need two charts and a matrix. Okay, so initially you would want to do this. You would click on Trading Apps. Here is your chart button. So you would add one chart. So here's going to be chart number 1 coming. Then we need another one, correct? So we would go ahead and click on Trading Apps, and we will select chart again. That would create a second chart in our workspace. The third element that we need is a matrix. So we'll click Trading Apps one more time. We will find the matrix, which is right there next to the chart. You will click on matrix. Okay, and the moment you do that, we will now have the three elements we need on our screen. Okay, and it's still waiting for symbol attributes, which means that it's still downloading information in this particular workspace. Okay, and the matrix, as you can see, it had my screen flash a little bit because the matrix, believe it or not, is a component of TradeStation that utilizes a lot of computer power. Okay, so that's why we have this little flash. Okay, but anyway, so what are we gonna do? Well, I'm gonna drag the matrix all the way to the right. Okay, and then I'm gonna drag it all the way to the top, and then I'm gonna drag it all the way to the bottom. This will give me the matrix located in the right place of the chart. Okay, and for some mysterious reason, it's taking a long time waiting for data. So I guess it's. Do I have data connected? Yeah, I am connected with data, so it should be fine. Let me see. When this happens, the download scheduler here got some data that is stock, but at this moment in time, it doesn't seem we got anything in the download scheduler. So we're just gonna be patient and wait there, okay? In the meantime, I'm gonna be working on those two charts that I have on the left, okay? So I have two charts on the left. And again, one of the top is very nicely aligned to the top. So what I'm gonna do is align the one from the bottom to the bottom, then, you know, nicely adjust it to the right as well, so it looks cool, and then move it down, okay? And then the chart on the top, I'm gonna do the same thing. So I will adjust it to the right until it's very close to the matrix, and then I will adjust it to the bottom. So that particular chart is now, you know, together with the other chart, okay? So now I do need data on the charts, because without data on the charts, now we do have a problem. So, because I need to add the AutoUFOs, and I also need to add the moving average, okay? So again, a little bit of a mysterious reasons here. Well, let me do this. We already got the charts in place. We got the matrix in place, okay? So this is what you would have done in the first place. Let me kill this workspace, because the moment you have done this, okay, the moment you have done this, you would be in that particular position where you have the matrix on the left and two charts, one on top of each other, okay? So let me remove all indicators so it looks exactly how I had it on the other window. I'm just gonna disable okay, I went too far. Okay, so disable the moving average. Okay, here we go. So here's how we have it. I have two charts on top of each other. Okay, one is the 2-minute time frame, and of course you could change that manually from this drop-down menu. The one in the bottom is the 15-minute time frame. You could certainly select the time frames that you want to use using the drop-down menu. Okay, I'm going to leave it at 15 and 2 because really this explanation has nothing to do with the method that we are using when we do short-term trading. This explanation is about you knowing how to recreate the workspace, because again, this is a question that you guys have been asking. Okay, so so what do we have? We have those two windows, and what do we need in the bottom? Well, in the bottom chart, what we need is a moving average. Okay, so what we're gonna do is you would right-click on the white space on the chart, select Insert Analysis Technique with TradeStation. Then you would have multiple tabs available, where the one on the left, as you are about to see, is the tab known as Indicators. So that's the one you want. Okay, and after I finish this exercise, guys, I'm going to reboot TradeStation because this is too slow. This is something's going on here behind the scenes. So I am not comfortable at all at this moment in time. And when TradeStation is running like that, it's probably going to hang any moment. Okay, so I will reset TradeStation in a minute. Okay, but anyway, so notice how the tab on the left is Indicator. So what I have found in that tab is Moving Average Exponential. Okay, and you know, it's always healthy if you keep this setting of prompt for format, you keep it checked. As you can see here, it's checked, okay? So if you do that, the moment you click OK to insert the moving average exponential, is gonna give you access to the input window where you can change parameters. In this case, it comes by default as 9, and you may remember that I didn't change it, so I left it at 9. What I did do, though, is to change the color, because by default, it comes with red. So on my workspace, I had it as purple, and then when it comes to the style, I just made it a little thicker. Okay, so again, this is personal preference, but this is how I did it. So the moment you click OK, now you have the moving average there on your chart the way I had it before. And then on the top part, the only thing you need to do is to activate your UFOs, which I understand all of you know how to do that. So the moment you activate the UFOs, that's it. Magic, the UFOs will show up on the screen, and now you're ready to execute your trades, okay? So again, let me reset TradeStation here, because we're going to start the session now, since I have covered how to recreate that workspace, and since for some mysterious reason TradeStation is running slower than what it should, in order to avoid problems, I'm just killing the TradeStation processes. And just give me a second, because I am about to restart TradeStation, and then we begin. Okay, guys? So let me see. Let me see, you have a few questions here. So while I'm restarting TradeStation, I'm gonna be typing my username and password, all of this. So while I'm doing that, I would like to take a look at your questions as well. So Emiral Patel says, do you think that TradeStation 10 is faster and or better? To be honest, for utilizing TradeStation in an everyday basis, if you wish, I would actually perceive the functionality and the performance of TradeStation 10 to be better than 9.5. Now, if you do things that are very complex, or like in our case, we're a fintech company, right? So we do a lot of programming and stuff like that. So I would say that for cases like that, TradeStation 9.5 is still a little more robust when it comes to programming language and stuff like that. But once you have all of these already developed, which is going to be your case, guys, that you are simply using the tools and using TradeStation 10 nowadays is quite stable. It actually receives more support compared to TradeStation 9.5. So I would say that it is actually very possible that you find less situations where TradeStation freezes, with TradeStation 10. You know that ultimately with TradeStation 10 or 9.5, one thing that is not ideal is the fact that the core of TradeStation is 32-bit, because no matter how powerful your computer is or how much memory you have, it will be limited to 4 gigabytes of RAM. So, that's a little inconvenient, but, that's what it is. Just show us the bottom moving average setup. Yes, you have it, Miral. And how did you make the candles thick in the lower space? Oh, that's very, very, very simple. You just, using your keyboard with the arrow up or the arrow down, you just compress or expand the candles. You can do it just with the arrow up or the arrow down, or you can right-click Format Window. And the moment you click Format Window, you have this setting here with bar spacing that if you make it a big number, for example, I'm going to go for 77, so then the bars become very big. If you were to go to Format Window and you were to use a very small setting, like, for example, 5, then the bars are going to be much smaller. Okay, so, to be able to adjust it manually like that, the only thing I'm doing is just hitting the upper arrow on my keyboard. That's it. Good. So I believe we are 100% in sync now. So it's time to begin our day. And to save a little bit of time, what I have done, since we have covered many, many things in prior sessions, what I have done is I have set up a directional long scanner looking for stocks that are potentially good picks for us to go long. I have set up a directionally short scanner looking for stocks that are potentially good picks for us to get short. And then I have set up the scanner for the scanner to identify setups where potentially those trades are going to be good trades for us to do non-directional trades using options. I use the word potentially multiple times because, of course, the scanner is very nice, but ultimately what is going to confirm if those trades are valid or not will be us applying our methodology, which involves the Okay, everybody, I am back. I have been disconnected from the internet connection, so I am back. You should be able to see my screen now. You should also be able to hear my voice. Please give me a quick comment on the comments box, a quick yes, a quick we hear you, Jose, simply for me to know that everything is back to normal. Please go ahead and let me know that this is the case. Sorry for that little interruption in the internet connection, guys. Okay, perfect. Thank you so much. So again, let's continue. Okay, so let's continue. And by the way, observe your inbox, okay, closely, because today when the session is over and we send you the recording of our session and everything, the content of the email will be slightly different because we're gonna be starting using different URLs to connect to the session. You've been noticing, I'm sure, I'm not the only one who noticed it, that in recent times we had what I would call a little bit too much of technical interruptions. So, we have a little bit of lack of satisfaction with some of the technology we're using to do the webinar. So we're going to be changing, okay, and we're going to be using a different link starting on Sunday, okay? So take a look at those emails because the way to connect with our sessions will be slightly different, and you will, just follow the instructions that we will be sending you, okay? But don't use prior emails, because if you use prior emails, you would be using old links, okay? Anyway, so guys, let's keep going. So basically, before the session I started, I have been running those three scanners looking for opportunities to go long, opportunities to go short, and opportunities to trade non-directionally. And my intention today into the session would be to begin with the long and the short opportunities, go over those particular trade setups, and then jump into some non-directional trades. And hopefully we'll have time to go all over this, okay? One more comment I would like to make, because again, we are building something together here, isn't it? We started, if I'm not mistaken, November 14 last year. It was the first session that we did together. And since we started in November 14 last year, every session, either during the weekdays or during the weekends, I have added more and more and more tools and rules and possibilities on how to trade. In other words, a lot of the things I've been teaching out to this point are certainly very, very precise and accurate and valid, but at the same time, there are many more things I need to add to everything that I have been sharing with you guys in these sessions to make yourself a better trader. For example, in the scanner for shorts here, we happen to find 4 trading opportunities to go short with CI, HPQ, NT, NX, and TIVA. So let's say all those 4 trades were valid and you were to execute them all. Well, if you were to execute them all in your portfolio and you were short all the way with 4 positions and you had nothing to hedge that to the long side, well, 2 things may happen. That you are right in those 4 trades and you're going to be very happy, or if you're wrong because the whole broad market turns and goes back up, then probably those 4 positions are losing money for you. And that obviously would be quite problematic, okay? So what do you want to do? Well, you want to manage the portfolio by looking at the different components that you have running in your portfolio when we are doing the longer term sessions, okay? When you do short-term trading, you may take 1 trade at a time, but when you do the longer term sessions, you're going to be running multiple trades at the same time, and we will need to get into portfolio management, into how many longs you want to have at the same time as you have shorts, how much delta you want, how much gap you want. So there are multiple things that we're going to have to discuss, and we will, when it comes to portfolio management, okay? So we'll get there at some point in the future. Right now, the point in which we are is that in the past Sunday, we learn how to do option spreads. So now we know how to buy calls, we know how to buy puts, we know how to do bull call spreads, and we know how to do bear put spreads. That's what we know when it comes to using options, okay? And therefore, I'm going to plan trades on that, but just keep in mind that even though the trades we're going to plan are certainly valid to be executed, if you were to take them all and you have an imbalance in your accounts where you have many short positions and very few longs, or many long positions and very few shorts, then your portfolio may be too biased towards one direction. And if you're right, it's great, but if you're wrong, it's going to be painful. Okay, guys? So my recommendation is that out of the trades that we'll be executing and planning, my recommendation would be that you execute one trade at a time with real capital if you choose to, and the other trades out of practicing and developing your skill and learning a methodology and all of that. Maybe it's a good idea that you use it in a paper money account, okay? Or if you want to use it live, okay, go for a very, very small size. Why? Because we have not discussed yet how to do portfolio management. And therefore, you may load your account with too many longs or too many shorts. Does that make sense? Or too many non-directional trades, okay? So we'll need to talk about all of these, okay? Today, and a few more sessions for sure, because we need more time to go over content. I'll be discussing one trade at a time. But as a trader, you also need to understand that when we do longer term trading, you will be running multiple trades in parallel. And it's critical that you manage the risk of the trades, not only one at a time, you also need to manage the risk of the portfolio, right? And because we're going to use options, we're going to have to talk about delta risk, gamma risk, theta risk, vega risk, rho risk, all those little things that we haven't discussed yet, okay? It's going to be quite simple, okay? But I just want to make sure that you don't get into situations where you are overloaded with long positions, overloaded with short positions, we have good tools to have good trades, but we are traders, so sometimes we'll be wrong, and we gotta accept that fact, and therefore we gotta be humble and respectful for the market, which is more powerful than us. Okay, guys. So we need to manage risk with the portfolio as well, not only per position. Again, that was a long thing for me to phrase, but it's critical because obviously we are traders. Our job is to manage risk. Okay. Miral, you're talking about showing the criteria for each scanner, and I'm a little short time here because today is a trading session. We have all of these in prior sessions that we have recorded. So if you don't mind, Miral, at the end of the session, it would be nice of you if you could remind me. I would love to do it if you have time, but in the meantime, I need to focus on planning trades, and that's what I'm going to do now. Okay, and if we don't have time at the end, I would suggest that you watch prior recording sessions. Okay, which, by the way, all of you guys, if you are joining those sessions, this week, the week before, all of you should be watching the prior recordings at your own pace, little by little, starting from November 14, because we have been building processes and rules together little by little, okay? There are multiple ways on learning how to trade. A classical way would be that we spend, 2 or 3 weeks in a classroom environment, 8 hours per day. That would be one way on how to do it. But obviously we cannot do that because we are, in different locations in the world. So we are doing it online, and we do it little by little. Little by little means that if you missed some of the littles before, I would understand that it's going to be your responsibility to catch up. And obviously, certainly, we're here to help. So if we have time at the end of the session, Miral, I'll certainly do that. But at the same time, we need to keep progressing, okay? So let's begin with the long opportunities, okay? So let's see if we have a long. The scanner, I just clicked the run button before the session started. So I'm gonna click AMRN and look at this particular opportunity to see if we have a trade or we don't. This is, by the way, a trade that we planned some time ago. Let me see if I can find it. I think it's here. Yes. So in that particular day, we were planning buying a call on that particular stock, and that would be more or less that day. Okay. Now, since that day, it is quite obvious that particular stock has been moving against us. We were expecting it to go up, right? Because that stock is defining a strong trend, but instead of going up, he's been going down. Well, obviously, it's not an ideal scenario, but at the same time, it is not something for us to be concerned because we were buying options with a longer expiration date, and therefore, we just need to wait because there are other UFOs of green color below current price. So we may have new green UFOs form, and this thing comes back up because this is a market in an uptrend, or maybe it has to fall all the way to the next green UFO before it bounces. And if that one doesn't work, then maybe the next one will push it. So again, every one of the UFOs got statistically 61% probability of pushing it up. So, even though it's not the nicest situation in the world when you see a market, when you enter a trade and the market starts moving your way, starts moving against you, but the fact is that we're not going to close the trade out of, acting a little bit in a, what would be known outside of trading as a little bit of a chicken approach to trading. We're just going to stick with the plan. And the plan in that sense was that because we bought a call and the call based on the scanning process. That call was one of the cheapest in the market. You know, I'm gonna flash it very quick just so everybody's on the same page. Remember, guys, we are looking at the bottom 50 stocks with the cheapest options in the market. The stock market is made of 9,000 stocks, and that particular stock has options that are, you know, in that group of the 50 cheapest options in the market out of 9,000 stocks. So those options are very cheap. So we paid very little for them. And therefore, those were trades where we executed those trades with no stops, which is kind of like an exception to the way on how most people trade. And it's not a reckless exception or a hopeful exception. It's not like we are not using stops because we hope it's going to be okay. No, we are not using stops because we know that when you buy a call, the most you can lose is what you pay for the call. And because the call was one of the calls that fall into this group of 50 stocks with the cheapest calls in the market. So, you know, the calls that we bought were very, very cheap. And because the most you can lose when you buy calls is what you pay for the call, and the call was cheap. So long story short, the risk is very low. And therefore, our job as traders now is to be patient. To be patient, and this thing ultimately will bounce. And if it doesn't bounce, then we lose what we paid for the call, which was very cheap, and therefore it's very little. Okay, so therefore I'm not gonna plan a new trade on Amarin, on Amarin, because we have already plan one. Okay, so I'm gonna jump into the short opportunities, run the scanner with the short opportunities, and the scanner give us 4 potential opportunities. So first thing first, let's load the chart to see if we have a trade. Okay. Also, the market will open in 3 minutes. You know that 10 to 20 minutes before the open, option chains get reset. Okay, option chain get reset, and you know that means that option chain get reset, and that means that we will not be able to look at the options yet. So what I'm going to do to save a little time, instead of looking at the options, I would like to look at the charts of those 4 symbols and conclude by looking at the charts if we do have a trade or we don't. And the reason why I was kind of interrupting my talking while I was talking is because I was looking at this parameter overnight. CI is trading 2.46% up, which is 172. And 172, it's more or less somewhere here. So that stock is going to gap up. And the moment it gaps up, that stock is going to enter this UFO. And obviously, that particular UFO, it's a UFO, you know, where we have sell on field orders in the context of a downtrend, et cetera, and this could certainly qualify very well as a good selling opportunity to short. My only concern with this trade, and that's why I'm going to jump to the next stock to see what happened, but let me phrase it so you know what I'm thinking, is the distance between green and red. The distance between green and red is not that much. Okay, is not that much, and because the distance between green and red is not that much, you know, the trade may not be worth it in the sense that, you know, you may end up making a 1-to-1, a 1.5-to-1. It may not be too exciting. So I would welcome if HPQ or NTNX or TIVA gives us or provide us with a better opportunity. I would love it. Okay, and therefore I'm loading the next chart to see what happens. So here's HP. A massive gap, okay, in a few days ago, massive gap from 24 all the way to 20, and definitely that stock is in a downtrend. But the problem is that the next UFO is located all the way up here, and the current price is 99.86. Okay, so we are quite far away from where the right entry short would be, which is the red UFO, and therefore I'm gonna go for the next one. Always being picky when planning your trades, okay? Always being demanding, always being selective, looking for trades that provide the best trade setups. If you don't have it, then we'll come back to CI and we may take it. And why am I saying that? Because again, at the beginning of the day, I was talking about portfolio management, which we haven't addressed that subject, but we will. And with portfolio management, what happens is that there may be times where you need to enter a short trade. Why? Because you got too many longs on your account and you need a short. And even if the short is 1-to-1, you still take it because you need a short just to hedge. So if that was the case, then we would look at CI, which is not the best trade in the world, but it would do that. It would probably serve for that purpose. Okay. So I'll come back to CI in a minute. The market just opened, by the way. So TIVA Tiva has a very similar setup compared to CI. Okay, maybe a little better in the sense that there is a little more distance between the UFOs, the green and the red. Okay, there is a little more, let's call it white space in between, and the white space in between equals the amount of profitability. So this looks a little better from the profit point of view, but from the probability point of view, notice how this UFO is a light color UFO, is light red, where if I move into CI, let me see if my memory works well. Yes, if I move into CI, notice how this UFO shows a dark red color. Okay, a dark red color. So what does that mean? Well, it means that this trade is likely to be more probability, even though the zone for profit, okay, the white space, as I said before, it's a little less in this case. Okay, so I would say that both of these trades are just as valid. Okay, problem of these trades that I guess that we had a bad tick earlier when we were observing this information on Cigna Corporation, where it was showing 2-point-something% up, and we had $172 per share. That was the price of the stock. But notice that the market just opened, and it's currently trading at 167.12, meaning that it was either a bad tick, which sometimes happen, bad tick on the chart, or maybe it was simply a little bit of trading that happened overnight with very, very tiny little volume, just one trade that happened to be traded at that price. Okay, so in the end, the price of the stock is in the green UFO, which it's a bad news from the point of view of getting closer to the red UFO and therefore closer to entering the trade. But it's a good news from the point of view that this price trading deeper inside the green UFO, it's consuming orders, and I would not be surprised that tomorrow, when the candle goes up and the candle closes, this green UFO will disappear from our screens because the algo will understand that many orders have been consumed, and therefore not too many unfilled orders are left. And that would be good because now this would open up a little more of the white space, and therefore Cigna could become a good opportunity a few days from now. Okay, but not at the moment because it's trading all the way to 167. Okay, so what do we have? Well, Cigna is 167. HPQ, let's take a look again. HPQ, it's right there, very far from the red UFO, as we said. NTNX, where are you, NTNX? Yeah, it's right there, far from the red as well. I mean, when it gets to those reds, it would be a lot of selling there. 3 UFOs overlapping each other, that's no joke. And then we got Tiva, okay, which again, Tiva, if Tiva rallies to this place, is going to be an okay opportunity for us to take the trade, okay? But we are far from all those opportunities, so instead, let me review the long opportunity with AMRN in case something major has changed. Yeah, we are more or less where it was, nothing too different. So, it seems that today, most of the focus and most of the trades that we're going to be planning are the non-directional, because the directional trade seems to be a little far from entry, okay? And by the way, this is, I'm not going to say common, because common maybe is a little too strong as a word, but this is, let's call it normal. What I mean to say is that the beauty of doing non-directional trading is that you don't care about where the price of the stock is between UFOs. As long as the price of the stock is between UFOs, you are happy to execute the trade no matter where the price is between UFOs. Where for you to take a directional long or short, you do care very much about where the price is, because you need the price to come back to the green for you to go long, or you need the price to come back to the red for you to go short. So price has to be inside the UFO for you to execute, where when you do the non-directional trades, you only want price to be between the UFOs, which is very normal. Okay, markets spend more time between UFOs than inside of UFOs, because when price comes into a UFO, normally the price rallies out or falls from that UFO. Therefore, price doesn't stay much longer inside the UFO. So for non-directional trading, where what we want to do is to capture time decay, it's great to have price between UFOs. And because price stays between UFOs most of the time, it's almost always that you will turn on your computer, you run the scanner, and you have an opportunity waiting for you ready for you to execute it. Okay, so it's quite convenient. Okay, and by the way, today I have been scanning for non-directional trades. I've been pretty picky. I'm looking at the 25 stocks with the most expensive options. Okay, for directional, because when we do the directional, we are being very picky, isn't it? We did talk about that like maybe 2 weeks ago. For non-directional, we are not picky with the trend and the moving averages and all that stuff. We are not picky at all, but we are willing to be picky with how expensive options are, because you're going to be selling options to do non-directional trading, and you want to sell very expensive options. The ones we are picking here, out of 9,000 stocks in the market, I mean, not all of them got options. Let's call it 6,000. Out of 6,000 stocks in the market that got options, we are selecting the 25 most expensive options out there. So it's a good beginning. Okay, and that stock got an ADX less than 25, which means that that stock is not in a trending condition at the moment. It may become trending, but not at the moment. And of course, becoming or not becoming trendy would certainly depend on where are the UFOs. Okay, so we're gonna go over that list of stocks in order to be able to decide if you have a trade or not. Okay, I have a comment here from Devan. I guess we got stopped, at least me last night. Okay, Devan, yes, if you have used stops on the AMRN trade, certainly it went below the UFO, you took the trade out, and if that's your rule, you did a very, very good job. Okay, you probably remember that in the session I was talking about another possibility as well, which is not to use stops, because you know exactly how much you're gonna lose if you're wrong, because you are doing a debit trade, correct? So in this case, the preferred choice I was sharing with the group was not to use stops. Okay, but if your trading plan implies the use of stops, it's 100% correct. 100% correct. You will have an opportunity to re-enter that stock as long as the stock gives you the opportunity. And if not, you got 9,000 more stocks to plan new trades. Okay, so not a big deal at all. Okay, it's all about you being disciplined and applying your rules, which I know you do. Okay, so good job. Team Trader, a question from Team Trader. Team Trader says, for directional trades, are you okay with having only one UFO to lean on over having multiple UFOs? For the CI and TIVA chart, the next UFO above the closest red UFO is quite far away, no? Yeah, I get your point. Look, a minute ago I was talking about being picky, right? Being selective with your trades. Well, what you are saying proves the point that you are a selective trader, and it's good, because when you do that, when you are demanding with what you see on your screen, and you don't take the trade unless you have multiple UFOs, overlapping each other, and they're close to each other instead of far from each other. So when you do that, you are certainly increasing your probability of success, 100%. But having said that, you also decrease the amount of trades that you will execute. And this is now when your personality, our personality, where we are all different, okay? Our personality shows, and some traders are always looking for those perfect trades, and they're happy executing few, where other traders are happier executing more, even though they get stopped out a little more often. So again, this comes down to your trading plan. And I will add one more thing, Tim, which is it also depends on the timeframes that you use, okay? For example, if you look at AMRN, and you were to look at the daily time frame, giving you a performance statistic, a UFO performance stat of 61, and now you were to plan a trade with this particular stock using the 60-minute time frame, and with the 60-minute time frame, let's see what we get. You got a probability of 53. Okay, so because the probability is less with the 60-minute time frame than the daily in that particular stock, which is not always the case, okay, you may have a rule that says, look, if the time frame I use has a lesser probability, then I'm gonna make sure I got 2 UFOs to defend myself. If the trade I have has a probability greater than, if the time frame I use has a probability greater than whatever that you set in your trading plan, let's say 60, for example. So then, I'll be okay taking a trade even though there is only 1 UFO. Is that making sense? So in the end, there is no right or wrong, because the consequence of the answer I give you would imply that you trade more often or you trade less often, or you have more probability of success or less probability of success. And this decision is basically what I'm saying is that the answer has pros and cons. And picking the pros or picking the cons would depend on your trading plan, and your trading plan depends on your personality. So the advice I would like to add to this is that when you build your plan and you come up with rules to decide if you want 1 UFO or 2 UFOs or 3 UFOs, just do it based on the performance stats, because that way you make your decision process to be objective. So instead of finding yourself analyzing a market and now you are wondering, you know what, I only got 2 UFOs, but I like it, should I take it or should I not take it? Well, instead of having those thoughts in your mind, which are subjective, my proposal to you would be to think about it from a point of view of being mechanical, and therefore make a set of rules in your trading plan where you say, hey, if my UFO performance stat is 60 or more, I'll be okay with 1 UFO. If it's less than 60, I'll go for 2. If it's less than 50, I'll go for 3, right? And that way, you always have a way to decide if you're going to take the trade or not. And that way on how to decide is not about you thinking, is about you applying the rules, okay? So you make yourself mechanical, which is the key to produce consistency, okay? So Tim, long answer, but key question, my friend. So hopefully you are okay with the answer and the answer was helpful to you. Anyway, so let's begin with our analysis for those trades, okay? Yeah, Lisa, and I was under the assumption that I am using English language indeed, okay? Just keep in mind that this is an international session. So we are dealing with traders from many different countries, including myself. Anyway, so let's take a look at what we have here, okay? So what we have here is briefing.com, which is a website I'm going to be using to do non-directional trading, because thanks to this website, just by typing the symbols of those particular stocks, for example, Amgen, very quickly here, I'm going to be able to access the information related to earning reports, okay? Earning reports. And this is going to be very useful because in the case, always when we trade stocks, stocks are a fragile asset by definition, okay? Stocks, think about it. The S&P 500 index is made of 500 stocks. So if you only trade one, really, you are dealing with something fragile. Is that making sense? So now, on top of being fragile stocks by definition, when I say fragile, I don't mean they are not a great asset to trade. Actually, the fact that there are 9,000 stocks in the US market gives you opportunities to find very unique opportunities, okay? But by themselves, they are fragile and they are impacted by many things. For example, earnings report. And if you were to trade stocks without understanding their earnings, which is a key event that happens every 3 months, you would put yourself in a dangerous situation and you may have a gap against you, which could be major. You have seen what happened to HP earlier. I showed you the daily time frame of HP, right? Look at this massive gap. If you calculate from here to here percentage-wise, we're talking about 15% down in 1 day on a gap. Okay, the S&P 500 cannot do that. Crude oil cannot do that. The euro cannot do that. It's those markets are way bigger, but stocks are small portions of the market, and therefore they are more fragile. So we need to be aware of those earnings reports, especially because when we do non-directional trading, what we're shooting for is a stock to remain in a sideways condition without moving too much to the upside, without moving too much to the downside. So we sell options and we wait for them to expire, and the options never got to become in the money because the stock never got to move much. Obviously, an earnings report would be a great motivation for the stock to move a lot. Okay, so we want to be aware of that. And running this process of looking at the earnings dates will help us to actually discard out of this list where we got 14 stocks. We may have to discard a few. Okay, so today is March 21st. Okay, March 21st. Let me delete all those symbols I got there. So Amgen, I'm going to type it in there. Okay, why? Because Amgen has earnings report that happened on April 24. In other words, if I was to use options on Amgen, I could use options that expire like a month later from now. So this is going to give me multiple opportunities to do things. What about BUD? Well, if I load BUD, it shows the earnings is on May 7. So May 7 is a very far expiration date, and BUD may also qualify well as a trading opportunity for non-directional trading. Why? Because the earnings date is far away. What about Celgene? Celgene Corporation is May 3. So CELG could be another good pick for us to do that. What about Disney? DIS. So when we look at Disney, we're talking about May 7. So May 7 works as well too. So Disney is good. DWDP. So what do we have there? Let me write Disney. So DWDP, May 2nd. So, many DWDP, May 2nd, is going to work well. What about EA? Okay, it seems that we are being in the lucky side today. And many times it will not be the case like that. So EA, May 7. What about FedEx? So FedEx is June 25. Okay, June 25, even more. Okay, reported earnings on the 19th, 2 days ago. What about Goldman Sachs? So Goldman Sachs would be April 16. Plenty of days. Okay, IWM is an ETF. So no earnings report, no need to check. Netflix, April 16. Good as well. It's far away from now. It's a month later. What about Tiffany's? TIF. March 22nd. So take a look. That one will not work. Okay? That one will not work. We found one. Why? Because today's 31st. If we were to sell options that expire after March 22nd, and on March 22nd, we have the risk of a huge gap in price because of the earnings report, we may get ourselves in trouble. Okay? So I'm going to write all the symbols. Netflix as well, but I will skip Tiffany's because Tiffany's has earning risks built in. What about Tesla? Tesla is May 1st. It's good. What about UPS? UPS is April 25. It's good as well, 1 month from now. What about USB? We are talking about April 17. So all the symbols that the scanner gave us nicely, they are all valid candidates for a trade, but Tiffany's is the only stock in the market right now that has earnings risk. Okay, so what am I going to do? Well, notice how I have added to my radar screen on the bottom left the list of stocks that qualify. Okay, and what I'm going to do now is I'm going to start with the most liquid and the less dangerous trades. So how do I know that? Well, this is coming from experience. First of all, IWM is the Russell Index ETF. So what happens with that? Two things. First, it's an ETF. What does that mean? It means it's very liquid. What else does it mean? It also means there is no earnings risk, and an ETF always moves more slowly compared to a stock, an individual stock. So if you were to be able to do this trade with IWM, probably it would put you in a pretty safe position. What is the bad news? What is the downside? Well, the downside is that normally what I just said, I am not the only person in the whole world who knows it. Okay? In other words, many people know that, and therefore many people sell options on IWM. And what's going to happen if many people sell options on IWM? What's going to happen? Well, the price of the options are going to go down. So now still, IWM showed up in our list, looking at those top 25 options with great amount of premium. So you know what? We may have something that we could use here, and it's worth it to check, even though many times when you try your ETFs to do non-directional trading, many times you will get a no for an answer because you may not have premium enough. The reality is that it's always worth it to check, because if the answer is yes, which will happen from time to time, and it does pass, a proper assessment of reward to risk ratio and all of these things, well, then you end up with trades which are of very high, very high quality. So it's worth it to spend 2 to 3 minutes to assess the trade and see if we do have a trade or we don't. So PD on the upper left means pending data. Okay, so I just need to be patient here for this data to load. I'm gonna, while I'm waiting for this to happen, I'm gonna trick TradeStation just a little bit. What I mean by trick is that I'm gonna be clicking on other symbols such as Tesla, such as Netflix, for example, such as Goldman Sachs. And the reason why I'm gonna clicking on them is because that way the download of the data will begin behind the scenes. And when I'm done analyzing IWM, I will not have to wait for the data to download. So I'm just clicking on a few more symbols, which I know out of experience that are quite liquid, okay? And if you don't know, it's okay. You just do it manually one at a time. And after you trade options for a couple of months, you will see how some of those markets, you will know. It will be embedded in your brain. You will know that they are liquid, and some of them you will know they are not so liquid, okay? So back to IWM, while these other symbols load, and notice how here we have multiple UFOs above, multiple UFOs below. So this is what we have. Okay, so well, obviously when doing non-directional trading, we are expecting this market to remain in a range for some time. So remain in a range would mean something like that, would mean something like that, something like that, and therefore when you get to that final expiration date, the options will have expired. And this market went nowhere, so now you make the profit. What do you need for the market to go nowhere? Well, you need a collection of UFOs above and below. That's what you need. And notice I said UFOs with S at the end, because if you only had one, it would be, if you only have one and you use an expiration date that expires in 2 or 3 days from now, you may be okay. But if you're going to use a little bit of a longer expiration date, you may not have enough. And therefore, my proposal would be to look at the 2 UFOs that we have below. Okay, plan for IWM that if it drops and comes here, expect it to bounce. And if it doesn't bounce and it comes here, expect it to bounce. In other words, what I am saying is that the expectation would be for IWM to reach, sorry for that, the ugly drawing. The expectation would be for IWM to reach this particular place on the chart. That would be the expectation, okay? Not to reach that particular place on the chart in X amount of time. And X amount of time, we will know that in a minute by looking at the option chain. If I was to project the same distance to the upside, okay, basically it would put us all the way there. Now on the upside, notice how we have so many more UFOs, okay? But distance wise, it's more or less equal distance, okay? It's more or less equal distance to travel from current price to reach the upper part of that particular UFO, or travel from the current price to reach the bottom part of the second green UFO in the bottom. Distance wise is the same amount of distance. So therefore, I would like to look at, let me load the option chain, because what I would like to do now is to look at the prices of the options and look at what happens if we start using 165 options and we start using 143 options. Take a look at how much premium we get paid for that, and what expiration date would be the expiration date for us to use to be able to profit from that trade, okay? So I got the option chain loading here. I'm just gonna input the market symbol IWM, which is the ETF we are looking for. Okay, and again, when you do this with ETFs, even though I'm delighted with what the chart is giving us, many times you will look at the option chain, and because it's an ETF and it has less premium built in, because it's an ETF, by definition, it's a safer market, a safer product, I should say. So what's going to happen is that the premium available many times will be much less. Okay, so we are looking at 165 and 143. So if I look at 29 of March and I look at the 165, even the 164 is 0. So let's take a look at what expiration date we will need to use. Okay, let me see. Let me add strikes here. If I add 30 strikes, yeah, it's not gonna work. Let me tell you, it's not gonna work, as I was anticipating. I'm looking at 1 month, 28 days from now, April 18. And if I look at the 164, not even the 165, I'm being paid 14 cents. That is far away from what we need when it comes to premium. Okay, so I'm not going to spend more time with IWM. Again, this is what happens most of the times with ETFs. I said it before, but it's always worth it to check because sometimes you do have this peak of premium, and then it's it's really useful. Okay, but anyway, so let's go for another one. The next one I would like to check is Goldman Sachs. I'm going from safest to more volatile. Goldman Sachs is obviously a very well-known and very liquid stock, but at the same time, this is a stock that, how do I put it? It's a stock that belongs to the financial industry, and normally, unless something really crazy happens, the financial industry normally, okay, there are exceptions to this rule, but normally the financial industry is not as active or volatile compared to biotechnology, for example. Okay, so this is a stock that we could think of something. Let's call it reliable, okay? And what do we have here? Well, the red UFOs are very, very, very far away. On this time frame, we have red UFOs here. Probability 48. If I look at the pre and post market data, is giving me UFOs a little below. Okay, and the next one, it's coming all the way to 220 something, 223. So back to regular market data. We got nothing in the 223. And by the way, I didn't look at the probabilities for the pre-market data. Probability is 49. So notice how the data we see pre-market and post-market with Goldman Sachs is actually more relevant than the data that we see during regular session. You got a 49% probability instead of 48. I mean, it's 48.99, so it's almost the same. But in other words, both informations is to be respected. We had a red UFO using pre-market data around 223, so I'm going to respect that, okay? But again, before I continue, this is how you save a little time. So let's take a look at Goldman Sachs 1 month from now. If I look at the 223, how much do I get paid? I get paid 8 cents. Okay, so it's very, very little. And if I look at like 15 days and I look at the 205, well, maybe we can rely on the 205. So let's say we want to plan a trade relying on the 205. Okay, so if we were to do that, let's measure the distance from current price to the 205, and then let's project that distance to the downside. This basically brings us to this UFO. So what I could do, okay, I need to look at pre-market data as well, but let me draw a horizontal line. So 176 is right below that UFO. Let's take a look at pre-market data there. Well, pre-market data, to be honest, we got a collection of UFOs there. So if I was to do that, I would want to move my line, right there below 174. Okay, that's where the line should be. So let's call it 173.7. That's where the line should be. And if I was to do that, I could plan a non-directional trade with Goldman Sachs, where the expectation would be to have Goldman Sachs remain trading in this sideways mode for a while, ranging between 173 to all the way to 205, and that should happen for a while. So if I was to do that, and for a while, I was to call it 15 days, and I sell the 205, the 205 would pay me 15 cents each, and if I sell the 173, which is gonna be something like 172.5, so it would be like 21, which is a little short. But look, guys, we may be able. Let me see, 175 is 31. No, we are not gonna be able to do it. We're not gonna be able to do it. So again, I'm having a few things behind my thinking process, but because we are short time, I'm just gonna jump into the next stock because my intention is to give you a trade before the session is over. Okay, we haven't discussed yet during the Sunday sessions non-directional trading. We haven't, and therefore I will, if that's okay, I will not share the thoughts I had in the back of my mind today because it would take a long time for me to explain. Instead, in the next Sunday session, we'll begin the process of learning non-directional trading with options, and at that moment in time, I will be sharing certain thoughts of certain things that is good to look for when you do non-directional trading, which is what I didn't find in Goldman Sachs. So I will explain it in an orderly fashion over Sunday. And that way, in the following weeks, when we do this, I'll be able to be a little more specific with my comment, because right now I understand I was not specific at all. Okay, so what do we have with Tesla? Well, with Tesla we have an interesting setup here. Let me see if we can take advantage of that. So first of all, we got two red UFOs overlapping each other. We also have a third UFO far away there. On the bottom side, we have two UFOs on top of each other right here. If I move the chart to the upside, do we have more UFOs below? It doesn't seem like it. What about with pre and post market? So the regular market hours is 51%, pre and post market is 48. So the pre and post market data really is less relevant in this case. Okay, so I'm gonna stick with Tesla. I will ignore pre and post market data. I will just look at the regular session data. And if I was to do that, again, let's do the same thing I did before. Let's play with distance. So if I calculate distance-wise, the distance from current price and the bottom line, and I was to copy new parallel, I was to project this to the upside, okay, this would place, the distance to the upside to be located here. So, in a perfect world, when you do the non-directional trading, if this is the top and this is the bottom, what you will want to do is to start the trade when the price of Tesla is more or less in the middle. Okay, well, Tesla is not in the middle; it's much lower than the middle. Okay, so this trade will have a little bit of a bullish bias, and this is something that we cannot change. Okay, it's what it is. Okay, another way I could do is to have a little bit of a bearish bias by selling short-term options using the 280. Okay, which this, to be honest, would be my favorite approach. I would not mind to be a little more aggressive, being bearish than bullish, because if I'm wrong and Tesla goes up, normally when the markets go up, the options lose value, which means that if I'm wrong and I get stopped out above because it reaches this part of the chart where I'm not expecting it to reach, but it does reach this part on the chart, well, yeah, I will lose money, but at the same time, I will lose a little less than expected because options will lose value, which is a classical effect. And when the markets go up, options tend to lose value. It's not always the case, but many, many, many times. Okay. So therefore, what I want to do as I plan this trade, okay, I am expecting Tesla to remain in this range between the two lines. Let's make it a little darker so you see better. And what I want to do, and maybe I can, I would expect to be able to use a very short expiration date. Okay, I don't think tomorrow, but let's try. So if I do tomorrow, the 259 are paying me how much? The 259, I could do 257.5. They're paying me 43, and the 280s, they are paying me 65. Okay, so you know what? I could certainly play with tomorrow and see what happens. Okay, so I'm going to right click to analyze and sell what we call an iron condor. Of course, we will discuss iron condors in our sharpening sessions over Sundays. So bear with me on that. Here, the iron condor, what we're going to do is I'm going to buy a call above and sell a call below. And then I will sell a put below the green UFOs. And then I will buy a put below the put I sold. Okay. And to do all of this, we're going to be using March 22nd, 2019 expiration date, which is 1 day to expiration, which is going to be really powerful from a time decay point of view. Okay. Now, again, we are dealing here with Tesla, which could be a volatile stock. So even though the trade is looking to me, okay, we'll see what happens when I simulate the trade in a second, but it's looking to me this trade could be quite powerful. Still, it doesn't mean we're going to be invincible. We will always need to also plan for the risk in case we're wrong. So 280 is the call I'm going to sell. Okay, so I'm going to sell the 280 call, and 259 is the put I would like to sell, but it does not exist. Okay, so I'm going to have to sell the 257.5 put. Which may force me to modify the upper part of this trade. I'll see that in just a sec. So let's enter those parameters in here. So on the bottom side, I got the puts. Let's begin with the calls. On the top side, I'm gonna go for 282.5, 280. That's gonna be the top part. On the bottom part, I'm going to go for 255 and 257.5, which was my initial plan. So notice how right now I am focusing on the 2-1 in the middle, the 257 and the 280, which are the ones I said. Okay? And the reason why I'm focusing on those two is because those two are the ones that I sell. Okay? -1 sell, right? So I'm focusing on that. And then I'm just picking one below 257, one above 280. That's it. And I'm doing that just to be able to have something to begin my analysis. And from there, I may need to run adjustments to find out, what is possible. So 280.12 is going to be the upper part of the trade. 259.08 is going to be the bottom part of the trade. So let me maximize this and take a look at what's happening here if we do this trade. So if I do this trade the way it's constructed, you will get paid 35 cents. Okay. And if you get stopped out above, you will lose $74. And if you get stopped out below, you will lose $57. That's how the trade looks like at the moment. And $35 is that if you do market price. If you do something a little better and you go for the mid, you will get 44. Okay. So if you get 44, which this would be a trade for you to be picky. Okay. So if you take this trade, okay, and you get stopped out, you will lose 48. If you get stopped out below, if nothing happens, you will make $44 per contract. And if you get stopped out above, you will lose 64. Okay. But what happens? As long as you survive today, okay, as long as you don't get stopped out in, let's say, 5 hours from now, you will have accumulated $9 and $10 of time decay, which means that tomorrow, if you were to be stopped out tomorrow, you will not lose 49, you will lose 39. You will not lose 65, you will lose 56. That's a time decay element. Okay, so that's going to help you greatly. The time decay is going to be very fast. Actually, it's going to be faster than what it shows here, because the last day of decay, the options are really going to drop like the world is ending. So that could be good. But at the same time, I would like to try to find a way to make this a little better if possible. So I want to observe the option chain, because when it comes to the 280 are paying me 70.75. The 282 are paying me 46.42. I got 4 cents of spread on 48. And here I got 25. So if I do 70 and 42, that's like $30 of premium. If I do 42 and 27, it may not be better. Okay, so what I could do is try to make this a little better. I'm going to give it a try to move the 282 to 285 and move the 255 to 252.5. If I do that, no, it's not better. It is not better. If I do that, I get more premium, which is 59, but I really, really, really increased the risk of the trade. Okay, really increased the risk of the trade, especially in the top part. So it's not going to be possible. So you know what? The plan I had before was the right plan. The plan I had before was the best plan possible using tomorrow expiration date. Obviously, when you execute this trade, don't go for the market price. Okay, be very demanding. You can see how the price is moving up and down. It was 44 a minute ago, right? It was 35. It went down to 32. Now it's back to 35. This was 41 earlier, 44. Then it was 42. So these things are fluctuating. So just have, the bid price is 51. So I would say, don't take this trade unless you get filled. Just place an order to get filled around, I will go for something like 50. So if you get 50, okay, you're going to get a risk of 37 below, a risk of 50 above, 56. And then you have the time decay, which basically gets you starting the trade as a 1-to-1, knowing that distance-wise, okay, forget about the UFOs, which you should never forget about the UFOs. But let's say the UFOs were not there, okay? So the likelihood of being stopped out in one day is quite low. Why? Because you got 2 UFOs to protect yourself on the upside, 2 UFOs to protect yourself on the downside. So it's almost, it's a pretty high probability that you will not be stopped out from today. And therefore, it's almost a sure thing. And please take what I just said carefully, because there is nothing a sure thing in the markets, but it's a very high probability that you will collect extra time decay. And if the stock stays pretty range bound, the time decay is going to be massive. If the stock moves away from you, then the time decay is going to be less. But still, you're going to reduce the risk even more. And if you are good in this trade, tomorrow when the market closes on Friday, you will have made $50 per contract. Okay, so not a bad one. Of course, we are using 1 day to expiration, so obviously the amount of premium left is not super amazing. But when you have UFOs closed the way we have them here, it certainly makes sense. So here's the trade, my friends. I'm just gonna have a vertical line here to represent that this is when the trade was taken. So, sometime in the future, we'll do some review sessions as well. We haven't had much time to do that because we're still learning things and putting things together. But, I'm keeping screenshots of everything. So someday we'll be doing review sessions as well, so we can learn from our own mistakes and discuss certain things that happen and, what can we do in certain situations and so on, okay? So here's the trade, my friends. Tesla, we are buying the 280 call, buying the 282.5 call, selling the 280, and then we are selling the 257.5 put and buying the 255 put. That is your iron condor. Don't be intimidated by options terminology, by the way. Sounds very fancy, but really what this is to sell. You sell 2 options, you buy 2 options. It's not that complicated. We will discuss all of this properly over the weekends. Okay, guys? So talking about the weekends, very quick before we conclude our trading day. Trade with UFOs, get together. This is our website. I believe all of you are aware of our website. So what do we have here? March 22nd, that's going to be Sunday. What do we have? We have a sharpening day, okay? Sharpening day on March 24, and that is Sunday, my friends. Okay, so I expect you there. Be ready with your questions. Sunday will be a longer session. We'll go anywhere from 1 to 2 hours. Normally we reach 2 hours. So we got plenty of time to discuss many things, and you may want to bring your questions there. Before we conclude, Miral, before I forget, so here is the scan for you to take a screenshot. Let me expand the averages, and that way you have all the information you need on the screen, okay? So you can take a screenshot of this, and here are all the parameters on how we do the scanner. This may be a little complex to replicate unless you watch prior recording videos where I did explain what is what. But again, you feel free to ask questions. Feel free to send us an email, and we can certainly, over the Sunday sessions, rebuild the scanner or help you to reproduce the scanner, okay? So anyway, my friends, a pleasure to spend this 1 trading hour with you guys, this get-together session. Looking forward to see you on Sunday. You guys keep doing what you're doing. We are receiving very, very, very good emails from some of you guys with, great aha moments, great, trades that you have executed, great improvement of your trading results in recent times, etc., etc. And we want to congratulate you for that, because obviously we provide the app, we provide the mentoring sessions and the education, and hopefully we are responsible for that too, and that would make us very, very happy. But ultimately, you are the person clicking the button, okay? So those improvements and so on are because you are doing a good job, okay? So keep doing it, and keep asking questions, and keep joining us, and keep working on developing your skill. You guys take care. See you on Sunday, my friends. Bye-bye.